Bloomberg Audio Studios. Podcasts, radio, news.
Live from Davos, Switzerland at the World Economic Forum, the big event. Ted Pick, the Morgan Stanley chairman and CEO.
Fantastic.
Good to see you,
guys.
sir. 1 year in the seat.
Yes.
It's flown by, hasn't it?
1 year and 3 weeks.
How's it feel?
Amazing.
Yeah.
You know, you come into this job and you want to do good, but what you discover is the quality, the underlying franchise and the people, and it's a wonderful franchise. They got the keys to a great car, and the partnership is alive and well.
Now you've got to hit the ground running.
Yeah.
American bankers running around CEO, very, very, very happy here in Davos, Switzerland, these CEOs and American bankers. Are you one of them? Are you optimistic about this year ahead? And what is it about the incoming administration that gives you that confidence?
Jonathan, I am positive because it is definitely a change in tone. It just feels like the overall framework is one where there's going to be more interaction between the public and the private sectors. What you guys were talking about the last couple of minutes, it can't be state actors alone, and it can't be private companies alone. So the fact that there's real dialogue building, I think that's a huge plus. And on the European question, sort of interesting comment too, because I think there may be some catalyst to some now reflection. You know, there were the Draghi papers. Did people read it? They kind of read it, but there was nothing. Capital Markets Union, Banking Union, kind of European sort of self-strength. Maybe this is a catalyst to some real conversation. So in that sense, I think it's positive too.
Are you hearing about actual business activity stemming from that change in tone in Europe, or is it just sort of a conversation at this point?
Well, I mean, we're like, 25 basis points into the new administration, right? We're just getting going. But yeah, a hell of a lot more than you would have expected 2 or 3 weeks ago. I think it's, it's constructive.
One thing in your earnings that really stood out was the stock trading revenues that really boomed. And I'm wondering, this has been a discussion about how risk on things have been feeling, certainly at Davos, but through the last couple of months. Do you see that waning at all, or is it just continuing to amp up in terms of risk taking?
Well, you know, when you become a CEO, one thing is for sure, all of your children are equally beautiful, but our equities business is one of our more beautiful children that I adore. And yes, they put up some great numbers. And I think that is a reflection on just the quality of the underlying franchise, but also a sense that people want to allocate to a little more risk. But importantly, they kind of want to get beyond the index level. You guys talk about this a lot, right? Sort of index level equity risk premium relative to sectors. And I think one of the positives here is we're talking about deregulation in the energy space and energy transition. We're talking about the financial services space. And yes, you need to own the 6 because they are money machines and great companies. But how about the rest of the 493, 494? And I think some of that dispersion getting kind of allocated across teams and sectors and around the world, I think that's a multi-year trend. I think we're early on that.
Concentration is certainly a risk factor that a lot of people are considering. Another one is the deficit and the cost of interest payments for the US government. For you, for the capital market business, is that a risk more generally that you and the team are focused on? Yeah,
you've been talking about that a lot, and I'm sort of, and I think it's important because if you don't talk about it, it sort of says, you know, there's no canary in the coal mine, right? But I do think there is the fact that there has been so much attention given to this, and you have folks like Besson coming in who know the bond market, that it has a sort of reaffirmation that we got to look out on that. Simpson Bowles, you know, here we are these years later. That having been said, you know, term premium is still pretty narrow. So, like, we haven't seen the long bond really move, so there's an underlying confidence. I think the question is, what kind of growth can we generate? I think so the conversation that one would have is which comes first, sort of the potential inflationary effect of tariffs or the positive deregulatory effect. And I think that's going to be one of the things we know is that there's going to be an ongoing dialectic, you know, which policy function can be transmitted more quickly than the other. And I think that pivoting and transitioning and the dialogue is important.
Do you think it holds back activity? That degree of uncertainty, given how confident everyone is, and Lisa especially, me too, we get nervous when everyone in Davos gets really confident.
Yes, contraindicator.
Does it hold back activity without having the clarity on what these changes are going to look like?
I think part of the dilemma is that the vernacular of whether we're really moving with animal spirits is whether we see a bunch of M&A prints. Like, where are those M&A announcements? And the reality is, over the last number of years, we've had, I think, 2 major uncertainties, right? The end of financial repression, 0 and 0, is that finally passes, and do we kind of know where rates are going to be? And we can focus on the detail of whether there'll be, 1 or 2 moves or none at all, but at least we generally know that for the next period of time, the U.S. risk-free rate is somewhere in the mid-4s. And then you can apply discount rates for country risk and the company and the rest of it. So that's kind of past us. So that's an uncertainty that's taken off the table if you're a CFO and you're in a boardroom. The second set of uncertainties has been around sort of the end of history, which is the resumption of nation states and the like. And one could argue, well, there's a lot of uncertainty in the world. I would argue the combination of having some sense of a rate framework and having some sense that things are going to happen in the U.S., in Europe, around the world, I think it galvanizes the corporate community. And so the question is, how much is the market discounted at? How fast will that be? And I do think important catalyst to this will be there are the better part of 1,900 companies in the private equity space that have $1 billion of aggregate value. 5 years of life on average, those companies need to move. So at some level, I couldn't tell you exactly the pacing of that activity, but we've been below trend line in the M&A market. We talk a couple years from now, I think we'll be a trend line or higher. I'm pretty confident about that.
You think it's going to be M&A? You think it's going to be IPOs?
I think it'll be everything. I think we've been talking about, you've talked about so much the sort of paucity of investable names, especially when you get past the big 7 companies and they're sort of small cap orphans without research. I think there's yes, it can be painful, Starbucks, for a young company to be public, but you get enduring long-term value from shareholders that actually can also add some value, and you can use that currency to make other acquisitions. I think the IPO product is alive and well, and I think importantly, what's happened as a sort of financialization of the markets is the intersection of private and public, that's come of age. So maybe you don't go public in the classic NASDAQ, New York IPO at the first, maybe you do some hybrid capital for a while, and then you go public a la Uber with a full capital structure.
One area that you've brought in, one of your babies that's very beautiful that I'm sure you talk about, is your wealth management unit. And
yes,
I'm curious
that's
about...
a big baby.
It's a big baby.
Big beautiful baby.
It was one of the drivers of revenues for a very long time. What's been the challenge in accumulating assets in the wealth management, growing assets to the degree that you really have wanted to?
Well, you have a massive denominator, right? And I think what's happened is we're now the better part of $8 trillion of AUM between wealth and investment management. If you look at sort of point to point, what have assets done? And obviously higher markets held. The assets in 1 year went up by $1.3 trillion. So people say, okay, you raised 250. Well, that's a huge number. And for me, Lisa, what's really important is how is our funnel working? Like, think about our wealth business as sort of having 3 parts. Self-directed E-Trade, we're seeing transaction activity really kicking up. That's clearly a positive signal, part of what you were asking about in the sort of pure equity space. We have this workplace business. I want your stock plan business because then I can do factory floor to CEO. And then the fee-based advisor, 50 basis points per annum. And the fee-based advisory growth is quite impressive, and it's going to continue for years to come, especially if clients need to allocate across sectors. You've
made a lot of acquisitions in the past. Any in the pipeline, planning any further types of tie-ups yourself?
You know, it's interesting. We see stuff, but I really love the durable growth organically that we have in the 2 major businesses, the investment bank and the wealth and investment manager. But over time, we'll continue to look at stuff as we accrete capital. Sure.
We've got 1 minute left.
Yes,
I want to
sir.
squeeze this in. Have you spoken to the president?
I have not.
Not recently.
Right.
If you had the opportunity to, and Davos will today, to throw a question at the incoming president, the current president, Donald Trump, what would you ask him?
I like the quality of the questioners you have. I do. I like the quality of the questions
If your name was in the mix and you had one, what would that question be?
He tried to punch by saying he's not going to do it.
I think the question I would ask is one where it would give him the opportunity to sort of speak to the possibility that he's thinking about a lot of different possibilities on a lot of different issues. Something along the lines of, are you open to taking idea flow around a whole bunch of different spaces and give examples? And I think my guess is the answer that he would give is yes, and I'll give you examples of that. And the reason that's important is because I think we're so early in this administration. People are trying to sort of weigh how much is tactical versus how much is baked. I think there's a lot of discussion, and people, it wouldn't be so much for him, but people understanding that there's a real conversation taking place on a whole bunch of important issues, and we're only 5 days in. I think people hearing that will give confidence that we are in the early stages of the dialectic, and there's more to come.
Ted, appreciate your time.
Thank you so much for having me, guys.
Thank you, sir. Safe travels back to New York.
I'm an avid listener and watcher.
Well, we appreciate that.
You've got to come on again soon.
Ted Pick, the chairman and CEO of Morgan Stanley.